Hey guys, we are doing your mock test for test 2. So we've got to look at internal control, substantive procedures and related parties. Well, that's at least what this paper is going to be focusing on. Alright, so let's start with the reading time. You had 12 minutes to get through this information, and I definitely think that you would have got close if not been able to get through it all. Alright, so you're an audit manager at Castle Black Auditors Inc. So just to note your experience for whatever you get dealt with in this scenario. You have been assigned to the audit of Stark Limited, so I can see here that they are public. I know that they have to have an external auditor, company secretary and audit committee. For the year ended 31 March 2020, so I've got my year end, very important to note, with a scheduled audit report date no later than 30 September 2020. So there's a decent amount of time, but if we actually work it out, April, May, June, July, August, September, that's the 6 months that are required by the Companies Act. So there isn't any additional rush on this audit report date. Castle Black has been the auditors of Stark for the past 3 years. So 3 years means I'm not worried about opening balances. I'm doing a continuation of this engagement. Stark was established many years ago by the Stark family. Stark family are still very much involved in the day-to-day running of the business, with shareholding equally shared by Nod Stark, the father, Rod Stark, the son, Ari Dothraki, the daughter, and Jim Snow, the nephew. So I've just got an idea, equally shared, so we're looking at 4, so 25% shareholding between each of these personnel. Stark specializes in the manufacture and distribution of steel armory. So now I can see what they do. If they're manufacturing, we're always going to have a risk at the assertion level with regards to my valuation of inventory. And from this, we can see now the industry that they are in. Something we have not had before, but good to know. Operations. Steel is purchased from King's Landing Pty Limited, a company jointly owned by Ari Dothraki and Nod Stark. So, I can now see that there are related party transactions, risk at the financial statement level. With regards to my related party transactions, there's those 2 risks, that they're not at arm's length and that they're not disclosed. And I can see this because the company purchases from a company that is jointly owned by the owners of the current company. Okay, so through this we can pick up that there is related party transactions. Also to note here that it's purchased from a PTY, so it's a local company. And so ultimately there is potentially VAT on that transaction. All manufacturing of steel armory takes place in the Stark Arsenal, situated under their head office property. Stark employs 500 armourers who work Monday to Friday from 8 until 5 and produce 14,350 pieces of armour on a weekly basis. So what I'm getting from this is just a little bit about their size, how many employees they have in the manufacture of their goods. Stark sells the completed armour to its many customers all over the world. So now I can see that they do export. And so from that, I'm going to have a risk at the financial statement level with regards to foreign regulations if they don't adhere to. And then at the assertion level with regards to my revenue, translation and cut-off. Its biggest customer, Night's Watch Limited, orders a minimum of 8,300 pieces of armour a week, and as a result represents the majority of Stark's revenue. So I can see that they have lots of customers, but one in particular. Night's Watch provide a private security service and therefore require sufficient armour to continue to protect the people. Night's Watch is owned and managed by Jim Snow. So Jim Snow was an owner of Stark. And so again now we've got related party transactions in their revenue. So there's related party in their purchases, related party in their sales. Demand for armor has increased over the past couple of years due to the impending War of the Walkers, a gang of outcasts with the goal of world domination. The increase in demand has put a huge amount of pressure on Stark's existing sales and accounting departments respectively, and as such, Stark has had to look into automating some of their functions. So automating, we're starting to see computer information system. And as soon as I see that, I'll make a note here for the level 2's CATS. The following system descriptions have been provided by Stark Limited. So we've got Working Paper 100, mobile app, Working Paper 120, loyalty program. Okay, I can see that it was prepared post year end, 12th of April, has not been reviewed at this point. So, mobile app. During the current period, Stark Limited engaged the services of an IT company, Let's App It Pty Limited, in order to develop a mobile app so that customers can browse Stark's inventory and place orders without delay. Okay, so during the current year, they had a change by adding a new app. And as soon as I'm seeing this change in their computer information environment, I'm seeing a risk at the financial statement level. Are the general controls in that app sufficient? And ultimately, when we get to the transaction, are the application controls. But all the risks of having a computer information system are now addressed here by saying, I know they have one. So are the general controls there? Below is a description of how the mobile app works. Customers download the Stark mobile app using their smart devices. Customers are required to register as a user by providing the following details. So if they're required to register and they have to give these following details, we've got mandatory fields or missing data. Name, surname, ID number, cell phone number, and email address. And as soon as I'm seeing all of those, I'm thinking controls, alphanumerical potentially need to be there, size checks need to be there for cell phone numbers. Yeah, just a few I'm picking up there. This data is recorded on the registered user database, and a unique user identification ID and personal identification number PIN are generated. So we've got a unique user ID, so that is an access control ID, and PIN number, again, another access control. Users load funds onto the app by either linking their details to the bank card or depositing money in the app at an ATM or any supporting retailer using the unique ID and PIN. Okay, so now I'm going to see that if there are bank details being linked, money being loaded, they have to have controls over that information. So there should be sufficient access controls and encryption to protect that data. Users may use these funds to purchase any inventory loaded onto the app. The app is connected to the real-time inventory listing, therefore users can only purchase the quantity and type of stock on hand at the time of logging in. Okay, so there is some sort of restriction here based on the real time. So there will be limit checks or range checks or reasonableness or verification or validity to make sure that they can only purchase what is available. Once the user has made their desired selection and the user is required to check out, and it is at this point that a unique code is generated for the customer's order. So if you're required to check out, you have to. It's a mandatory field or missing data if you don't do that. And a unique code is generated for the customer's order. So now we've got something like a pre-numbering of the order. The app is integrated directly with the company's financial accounting software. Okay, so what I can see is ultimately, as these orders are being accepted and fulfilled, the accounting software is going to be updated based on that. Okay, so all I did here is I read through and I made notes of what was jumping out at me as I was reading this. I didn't see these controls, but I imagine that those are the things that need to be there based on the information I'm reading. Okay, and then working paper 120, the loyalty program. Stark identified that some customers who initially used the app did not subsequently return to purchase Armour through the app. Stark found that often customers log on to view the Armour's availability, but do not continue with the purchase via the app. So Stark accordingly launched a customer loyalty program on the 16th of November 2019, so this is the current year, which reward app users with loyalty points for purchases through the app. The terms and conditions of the loyalty program are as follows. All app users are automatically enrolled in the customer loyalty program, so automatically into this. App users receive 1 point for every 10 Rand spent. So now guys, I would be making my notes here. 1 point for every 10 Rand. Fractional points are possible, which means that if, for example, 15 Rand is spent, 1.5 points are awarded. 10 loyalty points are equivalent to the value of 1 Rand. So you get 1 point for every 10 Rand spent, and in order to get your value from your points, 10 points will then equal to 1 Rand. So that looks a little bit confusing, so make sure you're quite aware. So this is earned, equate to that, and this is how you collect. Spend 10 Rand, you get 1 point, and when you now want to go and use those points, 10 points is 1 Rand. An app user cannot earn loyalty points on purchases that are paid for with loyalty points. Okay, so you don't get them if you use. Loyalty points are awarded on the first day of the month following the month in which the purchase was made via the app. This means that, for example, loyalty points in relation to purchases in November will be awarded on 1 December. So you will collect them in the following month. Unused loyalty points expire 4 months after being allocated. So there's a 4-month period. Very important. Total value of app sales in March 2020 amounted to 15,250,000, and so I can quickly go and work out here then the points that were awarded, which will only now be valid in April, are 1525. Loyalty points used by app users in March amount to 1523. So these points are not for my March sales. These points would have been awarded for sales anywhere between November to February. And that's just an idea of how they are using. We don't know if that was all the sales points that have been used. That was just in March. Okay, but we know that you can only use points from a previous month, which means those were not for the March sales. An industry researcher contracted by Stark for assistance with the customer loyalty program has estimated that 85% of loyalty points will be used before they expire. So this is really important, as this is going to help to determine the standalone selling price of the customer loyalty program. Okay, so at this point, guys, I'm seeing this customer loyalty program, and the only thing I'm going to put down here is IFRS 15. because I know that that's what governs the recording and the accounting of a customer loyalty program. I'm starting to see some points that are going to help me to determine the standalone selling price of the product and then of the loyalty program, and I'm starting to consider transactional prices. I don't want to work anything out yet because I don't know what my required is going to be at this point. Before I move on, I also just want to make a note here that this is an estimate, and therefore it carries all the risks with regards to determining whether an estimate is reasonable. So I'm going to put your assertion level with regards to your valuation of your liability because of your estimate. Okay, audit work performed on the loyalty program, class of transaction and account balances to date. Obtain client schedules and reperformed the costs and cross costs on these schedules. So now general procedures been done. Agreed the closing balance of these schedules to the amounts in the general ledger, trial balance and annual financial statements. Another general procedure done. Inspected the schedules and general ledger accounts for any unusual entries, e.g. negative, zero, large and round numbers. Backdated journals and followed up with management. So another general procedure done. Performed overall analytical review procedures, e.g. by comparing current year to prior year budgets, similar industries, etc., and followed up on discrepancies by inquiring from management and inspecting supporting documentation. Analytical procedures done. Inspected the financial statements for adequate financial disclosures in relation to the International Financial Reporting Standards or the relevant accounting framework. General procedure done. Obtained a signed management representation letter relating to all assertions regarding the class of transactions and account balances being audited. General procedure. And considered the effectiveness of internal controls regarding classes of transactions, account balances, and its impact on the nature, timing, and extent of substantive procedures. Another general procedure done. So all general procedures have been done. So it's going to be interesting as to what our required is going to be here. So let's go and have a look at the required.